Most traders lose money because they overcomplicate trading. In reality, one simple setup shows up every trading day. After years of reviewing thousands of charts, we focused on one repeatable setup designed to remove the guesswork and reduce overtrading. In this video, we're going to break down a simple day trading strategy and show you when to enter and exit. We're going to walk you through real chart examples step by step, and by the end of this video, you'll have a clear trading process that you can put into practice each and every day. Now, the first thing you're going to want to do is pull up a 5-minute time frame, and you're then going to want to apply two simple indicators. The first indicator is going to be the VWAP indicator. Now, VWAP just stands for volume weighted average price. And then the second indicator you're going to want to apply is the RSI. Now, once you've got the VWAP and the RSI pulled up on your chart, let's talk about how you can use this one simple setup to find clear entry and exits with minimal screen time and no overcomplication. When looking through the trades that have come through on the Options Flow platform today, we noticed ticker symbol VG. This order was about $72,000 behind the VG puts. These expired January 19th, 2026, and these were the 7 strike. So about 30 days to expiration. Now this was a bearish trade as these were puts. And so the next thing we're gonna do is we're gonna pull up VG on the chart. Now, here is how the VWAP works. We've got 3 lines on our chart. Now, these are going to act as either support or resistance levels, depending on where candlesticks are trading. If we're trading below the middle VWAP, that means that it will be acting as a level of resistance, which means that we will spend the session trading below until we're able to break above. You can see here how we were trading below, tested, we were rejected, traded lower, tried to come back up, tested, we were rejected, and traded lower. Now, on the other hand, if candlesticks are trading above the middle VWAP, that means the middle VWAP will be acting as a level of support. So you can think of that being a floor if we're trading above, and the middle VWAP being a ceiling if we are trading below, as we were here. Now, next we've got our RSI. Anytime the RSI breaks above 70, that means the stock is overbought. Anytime the RSI breaks below 30, that means the stock we're trading is oversold. And so we can look at this middle range, and then we can assume anytime we break below, we're always going to come back into this middle range. And then anytime RSI breaks above and is overbought, we're then going to come back by default into this middle range. And if we look at the time when this VG put came through on Options Flow, that was at 10 o'clock. And if we find 10 o'clock on our chart, that was right here. And so off of the open, we could see that VG was rejected at our top VWAP, and then we started trading below our middle VWAP. And now based off what we learned, we know that that middle VWAP would be acting as a resistance level. So the overall trend this day is bearish. Again, if we were trading above middle VWAP, the overall trend would be bullish. And if we look at RSI, we were actually trading below 30, letting us know that we were oversold. And so if we were to have entered puts here, and let's say we bought these same option contracts that came through in the flow, our technical analysis on our chart tells us we are definitely in direction of the trend. We are trading with the trend, right? We're buying puts, we're betting on VG to go down. VG is bearish on the day, it's selling off. And upon entering here, look at the continuation of this trend throughout the entire day. We continued selling off. So what we would have done was we would have entered here upon the order coming through. And then when it comes to finding an exit, we would either wait for a break above middle VWAP, or we would wait for the RSI to turn around to show us that overall direction and momentum was shifting. And so if this was our exit signal here when RSI turned around, that would have been at about 12.20. We would have then capitalized on the short from about 6.40 per share down to about 6.14 per share. Now, this would have roughly been a negative 4% move to the downside on VG. And you can even see what happened once the RSI came back above 30, how throughout the rest of the day, we pretty much traded in a range We didn't get any lower, and we also never broke back above our middle VWAP. And with options, the faster the move happens, the better. The longer that move takes to happen, well, those contracts, they're just not going to gain as value as quick. Now, if you're interested in trying out the options flow platform, we'll put a link in the description below, and you can see how it works for yourself. But when we look at the price fill behind this contract, this buyer that bought these VG puts got filled at $90 per contract. And these contracts went from $90 per contract all the way up to $165 per contract at the peak P&L of the day, which would have been that low. And shortly after, obviously, we would have taken the exit. We could have capitalized on anywhere between 60 to even upwards of that peak P&L of 83% returns on this trade. So that was a quick example of how you could have made, again, just about 80% at peak P&L if you had managed this VG put that came through on options flow according to the simple strategy that we covered. And let's go over another example now. Another order that came through shortly after at 10 o'clock was TXN. These were calls expiring 5/15/2026, and there was about $224,000 behind this trade. So someone knew something, let's just say that. Now, if we pull up the TXN chart at 10:05, well, we can see we would have entered right about here, okay, within this range. Now, let's reference where candles are trading at relative to the middle VWAP. Well, they're trading above. Obviously, this would be a call, so therefore we'd be trading with the bullish trend of the day, trading within the same direction that TXN was trending on the day. And yes, we would have temporarily been down on these contracts, but keep in mind, the middle VWAP at this point was acting as support or our floor. And so we never actually did break below middle VWAP. And you can see here, RSI was trading within our middle range, okay? And then heading into the last hour and a half of the day, we saw TXN break out to the upside. So here's where we would have taken profit at our top VWAP when we also peaked outside of 70, showing us that TXN was overbought. So right at this point where we came over 70 on the RSI, that was also high of day. That was also when we hit our top VWAP, which would act as our take profit. And those contracts went from $1,750 a contract to then being worth at this peak when we would have exited $1,825. Okay, nothing crazy. That's only a 5% return, but I still can't complain because it would have been a green trade overall. We can even ask option flows, options AI, relevant news on TXN, and we can see if the fundamental background, so what's happening to the company, whatever the news might look like, also aligns with our technical analysis. And we can see here, we can see their earnings. They increased their Q4 revenue earnings outlook. They announced significant investment to expand their semiconductor manufacturing, and they have a multi-year supply agreement with the automaker Texas Instruments. Those are three very bullish fundamentals that also align with the day's trend and that bullish stance on TXN. Now, obviously, that would have been a day trade. We could have held this over the course of multiple days, because these contracts still don't expire for another 156 days. Now, there are hundreds of trades that come in each and every day on options flow and so many opportunities to capitalize on. So if you're interested in trying out the platform, we've put a link in the description below, and we hope to see you over there.